Hey, it's Jeremy Williams, broker owner of the Bannack Real Estate Group, and today I wanted to talk to you about market conditions. It's hard to believe that we're already 6 months through the year, and when I look back to last year at this time, it's unbelievable the 180 the market's changed and where we are now. I don't think after COVID, I don't think we could have ever predicted that we'd be in this spot. Which reminds me of how important it is, whether you're looking to buy, sell, or invest in real estate, that you're set up with a good real estate advisor that consistently tracks the numbers. Because the market's always changing, whether it's something like COVID or something else comes into play or just natural progressions through the market, it is always changing. And if you could get with the right real estate advisor, you can actually, it's like insider trading. You can make decisions before the masses and the rest of the market makes those decisions and look for opportunities. So if you've already reading about it in the paper, on the internet, seen it on TV, mass changes happen, it's already too late. So get with a good real estate advisor, find out how we go through the numbers and track it, because there's also a lot of propaganda out there. There's people, my kids recently told me about something called clickbait, where you put out this crazy story to get emotion, cause you to click on the story, and what they're doing is they're trying to get followers for Instagram or YouTube or something like that. It really doesn't have a lot of backbone, but it's designed to get you stirred up and maybe create some fear. So make sure you're with getting the information from proper sources so you can make smart decisions. So with that said, where are we at today? I want to talk about two different things. We've tracked a lot of different stats for market conditions, but today I'm going to talk about absorption rate, which is basically supply and demand, and then what I call list the sales price. And these are two main indicators that give us a little bit of projection of where we're going in the future. And when we start to see these change, then we have to decide, okay, do we need to make different decisions of what we're going to do next? So absorption rate, it's basically supply and demand. And how absorption rate's calculated is if no other homes come on the market, how many months will it take to sell all the houses? So the National Association of Realtors says 6 months is a normal market. So that's a normal market, meaning it's you sell your house for a fair price, you buy a house for a fair price, and it's relatively easy to make that move. If you're over 6 months of inventory, then it's a buyer's market. If you're under 6 months of inventory, it's considered a seller's market. So compared to last year we had 2 months of inventory at the same time, and 2 months of inventory is a very strong seller's market. The further away you are from that 6-month trend in either direction, the more extreme the market is. Well, here we are a year later, and we're at 1.2 months of inventory, which still indicates a very extreme seller's market, but we are seeing some hints of that is starting to trend towards that 6-month line. Now, it's going to take a lot of homes to get to a normal market, but it is making it a little bit easier. When it trends up towards that 6 months, it makes it a little bit easier to sell your house at a great price, and still easier to find another house that might fit what you're looking for at a reasonable price. So we're looking for that to get a little bit towards a normal market. I expect as we get into September, October, and November that this year we're going to see a little bit more seasonality compared to last year, where our market was very strong during the winter time. And sometimes that creates some opportunities for purchasing. So we're going to look for a little bit of, I'm going to say, a softening, but that doesn't mean that prices are going to go down or the market's in danger. It just means it's just going to be a little bit easier to make a move. The next thing that I look at is what we call list the sales price. List the sales price is if you sold your house for $100,000 and you got $97,000 for your home, you get 97% list the sales price. So last year we had in July 100% list the sales price, and that's an average, meaning that some people got more than 100%, some people got less. But on average they got basically what they were asking for their home. This year, over the last couple of months, we've been trending up to 106% list the sales price, which is an indicator that our market is still appreciating at a high level. In fact, homes last year were, on average, the sales prices were 35% less than what we're seeing now. So I'm going to look for in September, October, November that 100%, 107% starts softening up. And when we start to see that change and see it trend down to 100%, really a normal market should be 95 to 97%. that's going to be an indication that we're getting more towards that normal market. So if you have any questions, want to know more about where's the opportunity, if you're thinking about buying, selling, or investing in real estate, how can you take advantage of this information, please call, or you can reach out to me at 406-531-1519 or send me a text, and we look forward to talking to you soon. Thank you.